Well, our very own Ross Greenwood has been on the ground in New York covering the election, and he paid a visit to Wall Street this week to catch up with Wilson Asset Management Fund Manager Catriona Burns, and they discussed the immediate market implications from Trump's win.
Catriona, the reaction from stock markets and markets generally after Donald Trump was elected as the next president of the United States has been really very dramatic. Are you surprised by that?
In many respects, not surprised, only because we've been given certainty. There was a lot of conjecture and debate going in. The polls were very close, and a lot of concern that with this. The results of the election would be very drawn out in terms of knowing who'd won and so forth. So we've had a very clean sweep, and Trump really come in very strongly, and so I think markets love certainty.
Okay, so let me take you through the various bits of this. Let's break it down. The stock market soars to an all-time record. Why has that gone to an all-time record?
One, because of that certainty, and I think two, because of Trump's policies in many respects are very much pro-growth for the US, and the policies around deregulation, tax cuts, and so forth. And if we're getting company tax rates going down, and potentially very pro-America policy, then those American corporates really are going to benefit.
Okay, so some of the tech shares went nuts, and in particular Tesla shares, up by 15% at one stage. Elon Musk's wealth soars by billions of dollars. Again, is this surprising?
Strong return on the money he invested in supporting the Trump campaign. So no, I mean, he's very much aligned himself with Trump. So you'd hope. I guess it's not surprising that if you align yourself with someone so publicly, that then when when the results announced, and it's not surprising that your share prices of your company goes up. So I think that alignment and that willingness to do it so publicly has meant that direct effect on the Tesla shares.
Okay, money market interest rates go up though, so all of a sudden there's a feeling that maybe interest rates won't fall as much as previously predicted. Why is that?
There's inflationary concern around, some of Trump's policies. So say the tariffs, for example, there's potential that they are inflationary because you're bringing manufacturing onshore away from places like China. So that will, the cost of producing in the US is going to be more expensive. So, doing that is potentially more inflationary, which will mean rates potentially can't go down as fast as people might have been expecting.
Okay, is it important for markets that Donald Trump arguably has control of the Congress, the Senate and the presidency?
Definitely important in terms of getting things through, and I think that was the debate with, even if Harris got in, it would be more likely be a split House and Senate, so that she wouldn't be able to enact necessarily everything that she wanted, whereas in this case we've had likely a clean sweep, and so what he wants to get done he'll have more freedom to do. Okay, can you explain why oil prices fell but oil companies in America went up? What was that about? Yeah, so I mean, Trump's been very vocal around drill, which is not necessarily positive for oil prices because you're going to have more and more supply. But in terms of the US companies, he's been clearly supporting energy independence for the US, and the idea that they want US companies and manufacturing and so forth, and all to come. The energy supply to come from domestic sources. So one of Donald Trump's most radical policies is on tariffs, increasing tariffs or taxes on Chinese goods by 60%, on Mexican goods by 25%, and on goods from other parts of the world, including Australia, by 10%. What impact does that have, and in particular on Australia? Yeah, look, the potential impacts are yet to be seen. The last time Trump was in power, Australia did a pretty good job at navigating around tariffs, and this time round he's been saying he's going to come out stronger on places like China. So we'll see what actually happens, but certainly the secondary impact of those China tariffs could be an effect on demand, the Chinese economy first, and then on demand for things like iron ore for Australia. The direct tariffs, I think there will be some negotiating behind the scenes, particularly, we have the free trade agreements for most of the goods that come from Australia to the US, so we'll see whether there's, leeway in these broad brush policies that he's sort of laid out in the campaign trail. So I think, look, we'll see. There's much more water under the bridge to pass, but China's probably the risk, and that secondary effect on Australia if the Chinese economy is really hit. The positive, on the other hand, is that in the last few months, the Chinese government at least is showing much more impetus to implement stimulus, and probably that was, potentially ahead of the risk that Trump does come in, and because the policies that he potentially implements will hurt their growth.
Okay, so you are buying United States shares here in New York. But then think about Australia and Australian investors right now. Are they in a good place because of Trump's presidency or not?
If they're investing in global US stocks, for sure.
Right.
So, yeah, I think, look, the US dollar's strong, US companies will continue to be strong. So I think it'll be great for Australian investors invested in global shares.
But does that translate into people investing in Australia? Does it make it tougher for Australia potentially?
I think you just have to be selective on the stocks that you want to invest in. Like, there's lots of global companies in, like CSL, ResMed, etc. They're global companies that earn, a lot of their earnings in places like the US. James Hardie, for example, there are lots of Australian stocks that are global in nature, so you've really got to pick amongst the winners and losers for the Australian share market.
So, Catriona Burns, always good to catch up with you. Lovely to chat with you today here in the financial district of New York.
Thank you so much, Ross.